Chapter one of cost accounting is really just kind of an overview, big picture of what do we really use cost accounting for. So basically, you're inside of a company and you're going to be making decisions with that accounting data to help the business be more efficient. So they have this term, the value chain. So that is the activities that are actually going on in that business. So they're transforming raw materials or other type of resources into goods and services that then they can sell to their consumers. So value added activities are the ones that are going to actually produce those goods or services. So again, something that the company needs in order to be in business. So different types of components, again, kind of depends on what business it is, but this is a broad overview. So our research and development departments, our design of our product, the purchasing function, our marketing and sales department, our distribution department, shipping that product out and handling the inventory. And then our customer service, once the product is shipped out, that we maintain good relations with our customers and make sure that everything is quality and there's no defects and all that type of stuff. From an accounting system standpoint, we're distinguishing here between what's our financial accounting, which is when we prepare our our various reports, like our annual report, our 10K and our 10Q. And inside those reports, we've got our balance sheet and our income statement and our statement of cash flows. And normally those we're always looking at like historical data to present those financial statements. Cost accounting is more focused on information about the costs, and they're going to help us make decisions into the future. So again, financial accounting is a little bit more of that past look. Cost accounting is a little bit more of a future and a planning look. So again, the financial accounting side of it, we are using generally accepted accounting principles or GAAP, where cost data is going to just be for their management. So it could be unique to what that management wants or that owner wants to see. So it doesn't have to follow GAAP. Customers of accounting. So from a cost accounting standpoint, again, it's going to be whatever users need that information to help them manage the business and make good decisions. So again, it would depend on what decisions they're trying to make, what type of data they're going to need. I mean, we'll talk about if they were deciding to shut down a product line or close one of their stores. Those are decisions that they'll make using this cost accounting data. So here's some of our different type of accounting personnel within a company. The top guy in the accounting side is going to be the CFO or the Chief Financial Officer, and they basically manage the entire finance, accounting, treasury, kind of that whole area. And they are also the ones who then sign off on those annual reports like the 10K and the 10Q. The treasurer then works closely with the CFO, and they're going to look at managing the money. So what's their best way to invest extra money that they have? How are they going to borrow money that they need to? So they'll focus more on all that cash management type of a job. The controller also works closely with the CFO, and they're more the head of the accounting. So they're going to really look at what policies are in place, and really all like the lower level accounting people are going to report directly up to that controller. So like your accounting manager, your staff accountants, your accounts payable, accounts receivable, all those types of areas. If the company has internal auditors, not all companies do, but they may be separate and not report to the controller. They may report maybe directly to the CFO or to even a different officer, because they're going to they're going to check that they're complying with not only laws like it has here, but also all of their accounting policies and procedures. So Sarbanes-Oxley makes us have all of our internal control procedures spelled out. The internal auditors are going to verify that those procedures are being done. And then the cost accountant is looking at how we value the product that we make or the services that we perform, and they're going to analyze those to verify it's properly recorded. So like I said, cost accounting it's more of that future look. It helps the business make managerial decisions. And those decisions are going to basically be about how to perform and be more efficient within that organization. And that's, again, all different levels of the company, though, from the owners to various managers, can look at that data to help them make, those big decisions. So then what type of cost data do they need? Again, it depends on the decision. So we'll have to look at what decision they're making and then look for all of the relevant costs and revenues that are associated with that decision. So like here we have an example. If this bakery is making and selling baked goods, the customers are suggesting that the business expand and sell the bakery offerings at morning and afternoon breaks using a food truck. So should they expand? So what are they going to look at? So they're going to look at, they've got to obviously make more baked goods, so there would be more labor involved, more ingredients involved. The distribution channel, so right now they're just operating out of a little store. If they do the food truck, obviously they've got to get a truck and they've got to get somebody to drive it. And then those again could involve probably more than I feel like what they have listed here. But if it's an actual food truck, there could be more things involved with insurance and all that kind of thing. But we've got utilities and marketing that can impact that. And then you always want to look at the differential. So you'll have questions that'll ask you that. You never look at what their status quo is or what they're doing now. It's what would change if they made this decision. What is the different costs in the decision, and then what would be the different revenues? So obviously revenues hopefully are going to go up, but costs are going to go up. So here they give us some different scenarios down below. So the first one is just their status quo. Then the second one is now they've added the food truck sales. And then if we look down here, all these little letters relate to what they say. So they say, okay, our sales revenues are going to increase 50%. So again, if you were doing this in a problem, you would take the 11,200 times 1.5 or multiply by 0.5 and then add it back. 1.5 makes it a little easier. And then do that for all of those. So then then their ingredients are going to go up 45%. So you could take the status quo's ingredient times 1.45. Then the utilities are going to go up 20%. So again, take the 500 times 1.2. So when I'm adding that 1, it's because it's 100% of the status quo plus the increase. D, the rent is no change because, again, the food truck's different. Marketing is going to go up because by 300% because they're going to try to get people to come to that food truck. Then now you have these new costs associated with the truck itself, to lease it, monthly payment, I'm assuming, and then the gas and the insurance and all that type of stuff. So then you come over here and you calculate your difference between your increase in your revenues, your increase in your costs, and they would still be money ahead. So they should do the food truck. Okay, then we've got different responsibility centers that can be set up, and we end up like kind of allocating costs to those eventually. So then here we have an example where we've got a president, again, of that bakery. So we've got a vice president that's over the bakery, and then a different vice president over the food truck. So again, depends on how big that business gets, that you would need that separate personnel. But so then here we have we're going to segment it out to say, well, this is how much we're making at the bakery. This is how much specifically we're making on the food trucks. And then we're going to combine them. So it's nice to see those so management can see specifically, because the total, you don't know, well, which one's doing better, which one maybe should I spend a little more time looking at and trying to get them to do things more efficiently. So that's what we mean by those responsibility centers. We're going to allocate, or we're going to separate those out so we can see. Now then, notice though, let me go back. They did not have the corporate office, which I think includes that president's salary in there, because again, he's not with one or the other. He's going to continue whether you have those or not. We also do budgeting in cost accounting, so that helps us to see if we're operating efficiently and if we're operating as planned. So when I worked I worked at an oil and gas company for about 9 years, and we had a budget. It was a big deal. We always, once a year we did a big budget. Sometimes we tweak it up as things happen during the year. But then for the most part, every month we would look at what are our actuals compared to that budget. And then I, as the accounting manager, would have to look over all those differences and try to understand why did they happen. Because again, sometimes it's things maybe you can control, sometimes it's not. But you do want to know, why are you not operating on budget? Then we have trends in cost accounting. So data analytics and data visualization are like the newest, latest and greatest things that are happening in business. So there's all different softwares that can help you do the data analytics and data visualization. So the data visualization is like taking it and looking at it as in picture form, because sometimes that's more meaningful than seeing it just in the numbers. But so different things that we can use, enterprise resource planning, critical thinking and data analytics. Those definitely go hand in hand. You got to be able to look at that data and it's telling you a story. So you got to figure out, what story is that data telling me? So you need to be able to critically think. AI is a big thing anymore with ChatGPT, and just how quick it can answer questions, problem solve, give you a plan, those types of things. So here we've got our enterprise resource planning with our various departments that are all tied together under one IT system. So that technology kind of brings those together. And then again, like I said, there's so many different artificial intelligence, and we've had people who are in the accounting industry say successful accountants in the future are going to be accountants who can use AI and use it smartly. You know what I mean? So you don't want to avoid it, even though in school I feel like there's a lot of pressure to say, like, don't use it because it's almost a form of cheating. Use it smartly, because you're going to be expected to use it in your job, or again, you might introduce it in your job if it can make you do things better and quicker. So ethical issues in accounting, we follow the Institute of Management Accountants, and we'll go through the different types of their code of ethics. So they have competence, so that all accountants basically maintain an appropriate level of professionalism. So if you're a CPA or a CMA, you have to go through get CPE, continuing practice education hours, every year. So that way you're staying knowledgeable in your field and you're staying up to date with the current practices. And you know all the laws and the regulations and those technical type standards. You want to be able to provide decision support, especially as related to like cost accounting. So you want to give good recommendations with good, accurate data and timely data to help your management of your company. A confidentiality, all members of the Institute of Management Accountants, they have to keep their information confidential unless they're legally required to disclose it, like through a court order. Inform all relevant parties of what is the appropriate use of that confidential information. So say you're working in the payroll department or you're working with payroll data. Obviously, that's not something that you should be spreading around in the lunchroom or with other employees at all. And then refrain from ever using it for your advantage. Integrity, we want to act without any conflict of interest. So a conflict of interest is when you stand to financially gain in some way through a relationship with that business. So maybe like your spouse's business is going to bid on a contract of that company's. You would want to disclose that so that there would be no apparent conflict of interest. If you had a family member who was a 10% investor in the company, you'd want to disclose that so that everybody knows that there's no conflict of interest. And then refrain from any conduct that would stop you from carrying out your duties ethically. Abstain from any activities that could discredit the accounting profession. And then contribute to the overall ethical culture within the company and within accounting as a whole. And then again, focus your professional above your personal interests. Members should also have credibility, so communicate fairly and objectively and provide that relevant information. Don't delay, don't exclude things, be timely with your reports. Communicate anything that maybe is, again, necessary for anyone to make a good decision or impact their judgment. All right, so that is our first chapter of cost accounting.